Can you calculate at this stage the effect that loose monetary policy around the world has had on asset prices this year? Everybody's trying to predict what next year looks like. How much of an effect do you think the Fed cutting 3 times, the ECB pumping a bunch of liquidity into the market, the Fed pumping a bunch of liquidity into the market has had on asset prices?
Well, I think it's had a big impact, Guy. So I think the Fed started to shift dovish at the beginning of the year. They only cut, from the middle of the year, but they stopped the tightening campaign in early January after the December rate hike. And since then, we've seen markets rallying. So S&P is up 20%. Over in Europe, DAX is up 25% as the ECB has resumed asset purchases. And I think virtually all of this increase, this rise, this rally in markets has been due to a much more dovish shift from not only the Fed, but global central banks. The point, though, is that I think this is now pretty much in the price. So markets have rallied on this liquidity injection, and most investors have become fairly optimistic on the growth outlook for next year. 2 months ago, 3 months ago, the fear was recession. Now the baseline expectation, the consensus view is that we are at the trough for global growth, and we will see some sort of a recovery in the course of next year. So the markets are playing the soft landing theme. And I'm getting a little bit worried that markets may have run ahead of themselves.